All right, all you market traders and profit takers, how are you this week? We are here at your ForexUniversity.com, and I am your Forex University professor. We're going to take a look at the week ending of August 29th, 2014. Turned out to be a good week. We've been having really good success lately, and I'm amazed at it myself. Not a lot of expenses paid this week, very small, with a 375 pip gain for the total of the week. It's just lovely. I'm loving it. Okay, let's take a look at the charts. And once again, we're still in consolidation with the Australian dollar. And last week we saw where, let me zoom in and get a little closer so you can see it a little bit better. Alright, and we talked about that crosshair right in here. That was after. Now look, we've got the close below, we've broken it, we've hit support, we come up, we doji down, kind of hanging there back at the top. A slight area of bullishness has taken place. We found our way back down here for a moment. I think last week we talked about there was a crosshair on a 4-hour chart that this bottom area touched on, I believe. No, that would have been here because that was last week. It couldn't have happened this week. This is this week's candle. So we're still consolidated somewhat with a slight bearish mood in that we have a setup for bearishness with this close that came in below the trend line. It's an aggressive trend line, but a close below the trend line nevertheless, and breaching it. There's a 618 area for this high to this low that's kind of nearby. We're getting really close to, so we're going to keep an eye on those. And here with the euro, we had hopes that we might get a little help with this 382 retracement last week at the end of the week, but that turned out to be a no-go. I mean, look at this thing, man. This is like a rocket that's falling out of the sky right now on the euro. We're moving and falling fast and hard. We'll see if the 50% retracement will be enough to hold it, which is somewhere around the 130, even 130.07 maybe. We might get down to that point this week, as a matter of fact, with the type of momentum that we're having. So again, we'll just have to wait and see. But as I said last week also, you got to keep in mind we've gotten a long way from this trend channel. Let's see, we're going to be looking at that as a point of resistance when it makes its way. Now, we did say that there would be some strong possibilities of a little movement back up, and we got us a bullish candle here finally after 7 weeks. We talked about it being the 8th week of consistent movement to the downside, and this is a setup for a lot of people to look at and consider it as a turnaround, possibly. Yes, from a candlestick perspective, it is if we break that high in this narrow range, and the fact that it's part of that aggressive move that could take place with this 25% retracement. We do have it in support. It's also at, again, a level area. You just have to be very careful in these types of scenarios. I would probably say the best thing to do is keep your eye on your QuickView. Look for resistance, though. If you're going to try and go long with this, you want to take your profit when you start coming back towards your resistance areas, and your resistance immediately are right in the area here with these lows, where you have these lows right in here around this 166.90s, possibly as much as 167 even. We're at the 165.80 something right now, 165.9, so another 100 pips. Look at it and be wary of getting hit with a little bit of resistance unless we get some kind of news that just takes us off into a new direction altogether. Like I said last week, this 25% retracement is an aggressive, fast mover because we've had such strong movement on the pound to the upside. It is possible that this could be a turnaround right here, because the 382 is quite a ways down at 162.85 or so. On the Kiwi, we've definitely broken our trend line. We're looking at moves to the downside and bearishness. Let's put a Fibonacci on here real quick. Let's see what we've got in terms of the overall long term. We've passed the 382 and we're heading for the 50. I'm going to take that back off now. Don't necessarily need it. We've got plenty of coinciding support and resistance levels. We do need to no, we don't. We've got, I was going to say we need to adjust this trend line, but no need in doing that. Now, one thing we could do is put a trend line right at the very top. Anything else would be too steep. Bam, just like that. That gives us a level around here for resistance around 86.80 or so. And it also gives us a line to look for to see how long it takes for this to work its way over to that trend line. I'm sure it'll have some reaction to it. Okay, that's the Kiwi. The bears are holding the Kiwi. The Canadian dollar has an engulfing candle to the downside. This is called dark cloud cover. This is we've got to close below this trend line and our trend channel. It's closed below there. There is support down here at 106.72 and also roughly around the 107.82. That's bearish. Sorry to say, that's bearish. It's an engulfing candle, so we're looking at the week coming up. We'll probably see some inside bars take place. That's something that we want to consider. And if it doesn't, whatever direction it takes, we've got to watch it real close. It's probably going to move in that direction. So we'll see. The Canadian dollar is it's falling off that strong move we thought we had back here in the beginning here with these soldiers marching up, meeting resistance at the 50% retracement on this downward move from this point here, where we had this close below here and broke it and started a downtrend. Then we had the highs broken from the close above this trend and started this move to the upside, but this very short-lived. It's made its way to 50% and now it's being held by that. We thought it might make it back to 61.8, but it didn't make it. So we're here with this dark cloud cover right now, looking bearish. We'll probably see it hit a little resistance before making a move to the downside. We want to watch out for this low down here on this candle. With its lows are at 108.09. When they break, that's going to signify a move possibly to the downside. But again, we do have the support at 106.70s or 80s or so on the Canadian dollar. However, the franc, on the other hand, is showing strength against the dollar. Only thing I don't like is I don't like seeing hammers at the top of a range. You know, I like to see hammers down at the bottom of a range. You know, hammers work better that way than this way. But nevertheless, the high has been broken on this break above this trend line from last year's downtrend, closed above it, and it's been broken. So that's bullish. You know, we're going to work with that from here. Now, on the yen, on the other hand, we've got this is not a hammer over here. This is a hanging man. Remember how I used to play Hangman? And that's what that looks like. So Hangman is bearish. So we might see some movement back down again in the yen. We've got levels around 103.36, 103.23. It's a little channel in there. Then we have this same channel here we've had for a while at 102.99 or 103. And we've got more support again at 102.70 and 102.59, 102.38. So let's see if the hanging man will bring us back to some support. We might even be as aggressive as 103.75 in the support line here. It could happen. It is possible that this resistance could be used as support at this point, especially if it lines up with one of these trend channels later on. Maybe not next week, but then again, maybe it would be next week. You just have to have some patience. Analysis is not 100%. Nothing is absolute, but we do have high probabilities, and we work with them as such. We use our money management to keep our balance in order, our profits up, and our losses low. And we use that QuickView. That QuickView is a monster. It works good. Keeps us in the green, the black, or we don't get a lot of red numbers. I mean, look, the proof is in the pudding. You look at this, you see a lot of black, don't you? You don't see a whole lot of red. It's black, and we can go back through history and see that it's more black than red. And these were plays when we didn't trade for a couple of weeks there. But man, look at the black. I mean, it's just consistently, and we've been having, but I must admit, we've been having a really, really good run here lately. We've been doing outstanding, and I'm loving it. But hey, it's all about doing your analysis, working from the outer edges, or should we say the longer term time frames, working our way in, keeping an eye on the quick view, and letting it show us what to do for the days that we trade and the levels that we need to trade at. And as you can see, it works very well. Alright, so this is the week ending of August the 29th, 2014. We are going into a holiday weekend with Labor Day here in the United States, so trading is going to be at a very low volume across the board. We won't be trading on Monday. We'll come back in on Tuesday and start the week then, see how it works out. Until then, this is your Forex University professor at yourforexuniversity.com.